Thank you for joining us. This is David Corwin. I work for IAMS in the annuity department. I'm a sales director here, and like I said, thanks for joining us. And if it's 10 o'clock on a weekday, you can rest assured that we'll be teaching you something. This is a very valuable webinar in regards to the Brighthouse SecureAdvantage product. We've had access to that since February of last year, and it's a great product. And Jared Anderson will be on the phone with us here, going through the product and teaching us how to better use that particular product in our sales. So with that, just direct you to the top right there, our number 800-255-5055. It's the only number you have here at IAMS, and we feel that that's the best way of doing it. We have the 3-ring guarantee. You'll never ever speak to a recording. It's always you'll speak to a live person. That's what makes us very valuable in the industry, and a lot of people like us for that. New producer builders, that's in your first 6 months of production. That's what you'll get for the 100,000. You see the different value. We actually only had a couple of levels, or 3 levels actually, last year.
Hey, David.
Actually, yeah.
Real quick, your screen is not up, so I don't know if you did start on your screen.
That.
I don't think there's
Hold
anything.
on just a second.
Yep, no problem.
Should be able to see it now.
There you go.
Okay.
Yep.
Thank you very much. Appreciate it. Sorry, everybody. So anyway, you see the number there. New producer builders, I'm going to leave that up for a little bit. You can see the different levels that you have there, 100, 250. I had a guy just qualify for the $500,000 level in the first 6 months of production, and he's taken he's actually going to do some marketing with us. He's going to use his marketing money, and he's going to do some various lead programs with us, and that's just great that we can compensate him that way. IAMS Business Builders, of course, we have that referred producer program. That's agents like to use that, and it's really nice that some IMOs will give you just a little perk and give you a one-time bonus. We actually get you, you can actually ride along with the agent that you refer. You get a $50 bonus right away, and then $100 bonus when the agent actually produces some business, and then you get to ride along, like I said, along with them as they produce business throughout the years here. So that's a really good thing. I've seen some other referral programs, but this one seems to work out the best, and a lot of our agents really like it. Marketing reimbursement program, of course, we have that as well down at the bottom. You get $100 marketing reimbursement for the first 200 for 100,000 of premium. Of course, that's index premium only. We do give you some for the single premium life, as well as your IULs and term as well. Back office support, this is kind of what we do here. Obviously, I mean, I'm in case design, so I run illustrations for you. We have forms on our website, submission to commission support. I don't know if we have the have the trademark on that statement. That's pretty cool though, submission to commission. I wish I could have came up with that, but I didn't. Life and annuity quotes are available on the website. Of course, we have coaching and things like that you can do. Paperless contracting, that's relatively newer to us. We've actually just started that this past year or so. It's through Assurance Bay. So no longer is in the paperless world that we live in, will it be that you actually will have to fill out contracts. We don't do that anymore. It's actually all done through electronic means, and some agents like it and some agents don't, and the ones that don't typically are the older individuals, but we tend to work really well with them and help them through that particular process. Speaking of electronic means, Firelight, that's a way in which you can submit your all of your annuity applications, and we've had some very good success with that. Learning curve is always a little difficult with agents, but they tend to like it. Once they realize they don't necessarily have to be in front of the client when they submit it, I think it's a little bit easier of a process. That's what the mistake is made typically with agents, is that they think they're going to have to be in front of the client. Of course, the mistake is going to happen. Murphy's Law will be in place there, and the accident will happen there. You won't be able to get through a process or something like that. So if you can submit it without them there, that's always the easiest thing. Most agents are okay with that because they have all of the information from the client there in front of them, so they can actually just put it in there and input it. The carriers that are available on Firelight, you can see that on the left-hand side, all the known carriers. Of course, we're going to have a few other carriers that jump in there as well, but most of our core, I should say, our core carriers are in there. There's just a few others that I always call those the one-offs that will be available very soon, if not within the first quarter here, or second quarter, I should say. Creative marketing solutions, we have turnkey, obviously, marketing solutions in which we can create a website for you. We can do handouts, newsletters, postcards, and digital solutions. Obviously, I still talk to agents. I talked to one the other day that actually does not have a personal website, doesn't have a LinkedIn account, doesn't have Facebook, doesn't have Twitter. Twitter probably isn't something you really use too much, but it's bewildering to me as to why you wouldn't have a website. And I think it's because they don't know how to do it. Well, we can help you with that. And we've actually had a lot of success at setting up agents with not only the website, but a brand. And it's really turned their business around, and for very low costs as well. So if that's something that you'd like, please let us know. And of course, we can help you out with that. Our IAMS website is extremely robust. A lot of great information, as I explained in one of the previous slides. You can get all your forms and things like that. But there is a database as well that you can get into, which allows you to view various things. I mean, not just related to annuities, but buy-sell agreements or key man, specimen contracts, anything that you would need on there. Some advanced stuff down to the basic stuff is available there. We also have a annuity search tool that's called Annuity Rate Watch, which we have access to, and so do you. Allows you to look at various rates and things like that, and even run income rider quotes as well. Retirement Analyzer, that's something that's actually manned by a gentleman by the name of Marcus Solar here. That is something, if you've not looked at that, that's a way in which you can input your clients, all of their information from IRAs to 401k plans, non-qualified annuities and things like that, and actually will put together a nice little report that you can show to your client, and actually will show you various income gap analysis that can kind of help with various things and kind of lead the way down the path of maybe writing an annuity or something like that. IAMS Wealth Management. This is something that is in-house here. Some other IMOs have wealth management off-site. It's probably 20 to 25 feet away from where I sit, so it just makes it very, very good for agents and producers that want to get involved in that. We can really kind of just be, as I said before, close in proximity to IAMS Wealth. So they're just, like I said, just down the hallway, and it works out very, very well for agents and things like that. If you're interested in that, please let me know. I can certainly get you in touch with them, and you take your Series 65 or whatever you'd like to do. If you already have one of those, we can certainly help you out with getting you assigned there to wealth management. This was just announced about a month or so ago. The new producers or top producer summit that is in Italy. It's a Mediterranean cruise. It's very easy to qualify for, $4.5 million of premium, of annuity premium, and that's any annuity premium, by the way, just indexed or fixed, it doesn't matter. And life insurance counts as well, or any of the business you write through us does count. And it's an 18-month qualification. I've seen some other IMOs that it's a year or so, but this one's an 18-month qualification, so real easy to qualify for. And we've had some agents that already qualified for it already, by the way, so that's a great thing. Follow us, like us on LinkedIn and Facebook, and also, you're going to get a recording of this sent to you just by being through GoToMeeting. But then a secondary thing I'd like you to do is on YouTube, there's a way to subscribe to our YouTube channel. That would, anytime we put out like I said before, if it's 10 o'clock on a weekday, you're going to learn something from us via our webinars. If you subscribe to our channel, you'll get an email sent anytime we do anything, anytime we record a webinar. So it's just good little secondary way. You know how emails are. Sometimes you get lost. If there's another way to get our communication, the better off you'll be. And so, like I said, I'll do that in addition to the Facebook IMS. If you could like us, and as well as on the LinkedIn, like us as well, because we like you. So with that, I'm going to turn it over. I had to be real quick here because I know Jared's up against the clock here, but I'm going to go ahead and turn it over to Jared. Are you there, Jared?
I'm here.
Okay, great. Let me turn it over to you here.
All right. I do not have the ability to connect my screen, David.
Yep. You should now.
All right.
Ah.
Tell me if you.
I
see.
can see your family.
Perfect. Well, I won't bore everyone on the call with that. We'll get started with what we want to talk about. So, appreciate the introduction. As David mentioned, Jared Anderson from Market Synergy Group. Guys, I want to take about 15 or 20 minutes with you and talk a little bit about a product that we have through Brighthouse Financial, as David alluded to. It's something that we designed to work directly with them. Tied the organizations together about a year ago. We've had a pretty long history with them, but a brief introduction as to who Market Synergy Group is and what it is that we do. As David mentioned, we do proprietary product development and distribution. Brighthouse happens to be one of the companies that we work with. Again, just a quick overview of what we deal with. Maybe you're familiar with it and maybe you're not. The AIG Power Select series is a product that we developed as well. We started our company back in 2014, had a tremendous amount of success and growth with AIG as an organization, and have moved into other different carriers, and as David had said, proprietary to a handful of organizations that we essentially handpicked, I'm certainly being one of them. So want to take a few minutes with you and walk you through why we designed the Brighthouse product the way that we did, and see if it potentially fits into your product portfolio that you could potentially offer to your clients. So really, how did we get there? It's important to paint that picture for you to understand why we felt it was important to come out with the SecureAdvantage product, and then we'll get into details as to how that product works specifically. But really, it's based around volatility for fixed income assets. I mean, generally speaking, FIAs have been kind of an outlet for bond alternative, if you will, and the general consensus has been, how can we get that 3 to 5% rate of return, which is a couple hundred basis points higher than what we can get in any sort of savings or money market account or things such as that. One of the things that we realized is there's a lot of volatility control indexes out there, and make no mistake about it, we're big believers in that as well. However, we wanted something really simple and S&P based that a consumer is going to be more familiar with, and really give them that upside potential that they're looking for. The reason I say that is if we think about what's taken place over the last 30 years or so, the bull market that's taken place with the bond market, with interest rates being as high as 15% or north of 15% going back to early 1980s down to less than 1% through most of 2020. We also know that volatility control indexes certainly benefit from that from an illustration standpoint. And quite frankly, we wanted something simple and easy because quite frankly, we felt like an S&P type of an index or an S&P type of a design is something that was desired not only by the clients, but certainly by the advisors as well, you all, looking for something that's very consistent, something that each client is familiar with, something that's short term. As I mentioned, we're in the lowest interest rate environment we've ever seen. So our thought process is you as an advisor would like to have the opportunity to have a shorter term product that allows you to reposition that client after a short period of time. And when interest rates are low, if we can lock them into an S&P type of a strategy for a shorter period of time, if you will, we think there's going to be better things out there as interest rates continue to climb up and move in the right direction for us from a pricing standpoint. But again, looking at fixed income yields over the last several years, going back to 2007 with a quick snapshot here, focus on the 10-year treasury yield. At that time, it was over 4%. In 2020, when we created this slide, it was 70 basis points. So as you can imagine, there's minimal opportunities for the carriers when they're trying to price products, which is obviously important to you as the advisor because that's what you have to offer to the client. So, we wanted to get creative in our short-term product and offer something that nobody else out there had. So that led us to the Brighthouse SecureAdvantage 6-year product. This is the tagline that we've used with our launch, as David mentioned earlier. We launched back in February, so we're coming on our first anniversary of our very first policies being sold. Help grow your clients' tomorrow money, which was important to us. So what I want to do here real quickly is talk to you about how we came up with the design, as I mentioned earlier. 6-year product, and certainly one of the things that we knew is with a longer point-to-point crediting strategy that we have on this product, we knew there was going to be some questions from the advisors, and we wanted to address those up front. So things that the industry does not like about longer point-to-point crediting strategies. Client sees no gains in the index until the end of the crediting term. No death benefit if client dies before the end of the crediting term. Oftentimes in an FIA, you go back to your previous contract anniversary for a death benefit. That's an objection that we heard a lot. That's certainly something that people didn't love. Hold on just a second. You guys are seeing the wrong screen of mine, so I apologize. No death benefit if client dies before the end of the contract term. Oh, having a little problem here, David. Give me just a second. There we go. No interest credit reduces free withdrawal availability, and no partial credit on free withdrawals. Client can lose all the gains at the end, and no annual reset to take advantage of down market rebounds. So we took this product design and we tried to address each and every one of those. The point of client sees no gains in the index until the end of the crediting term. You have a full performance value that's shown every single day. You as the client, you as the advisor or your client have the ability to log into the Brighthouse account and see exactly where you're tracking each and every day. No death benefit if the client dies prior to crediting term. That daily performance value is also the death benefit. So essentially they have the ability to watch this thing every single day if they choose to do so. In addition to that, that's the death benefit that they would receive in the event that the unexpected happens. No interest credit reduces free withdrawal amount. We made that very simple. From a planning perspective, this is a 6-year product that you can access 10% of your initial premium, including the first year. Very, very important when you're doing planning for these clients that you're working with on a regular basis. No partial credit on free withdrawals. You actually get pro rata credits on your withdrawal. I refer to it as time served. So for instance, if your client takes that free withdrawal in the third year of the contract, they're actually going to get a 50% credit on that withdrawal amount at the end of their contract term. Client can lose all gains at the end and no annual reset to take advantage after down markets. Our annual sum crediting strategy, which we're going to spend some time on, actually allows for annual reset every single year, locking in the gains and allowing them allowing the client to benefit from lower index values for potential index rebounds, and we'll talk about that here in a second. In addition to that, we have a straight 6-year point-to-point strategy that allows for a lock-in, which I think is very important if you think about where the S&P is at, where it can go. For instance, as we mentioned earlier, we've been live since February, and we're seeing substantial gains on some of these different options, and we'll talk about the rates here in a second. But having that locking capability is peace of mind for you, the advisor, as well as the client. So that's obviously pretty important. I'm going to skip this slide and get you directly into the product and see if we can give you guys some pretty good information on this. But who is Brighthouse Financial first and foremost? One of the most important things for us is to work with extremely strong carriers, as you can see on the bottom right hand of the screen. Brighthouse is an A+ rated carrier with S&P. Tremendous amount of assets, very strong company. And, for those of you who are familiar, it was essentially the breakoff of the insurance arm of MetLife. So certainly a big name, somebody that we're definitely excited to work with. Where they got into our industry was really sales of index-linked annuities with over $12 billion in sales through the Shield product. And we have an existing relationship with them on the Shield side that ultimately led to us launching this FIA in February of 2020. So the SecureAdvantage 6-year product, a snapshot of what we want to do. We took an approach to say there's going to be 3 pillars when we talk about this product. Protection, which is obviously important in an FIA. Growth, we want to have an innovative annual sum crediting strategy that allows for growth that you don't necessarily see in other products. And then clarity. I mean, this is a simple, safe 6-year product that allows for accumulation opportunities that you don't see everywhere. And more importantly, the ability to have rates that can't ever change. That's the biggest selling feature of this specific product, which we'll go through here in just a second. But the reality is we have, through this annual sum crediting strategy, an annual reset opportunity with higher than average rates that can't ever change. If you think about conversations that you've had in the past with a recent drop in interest rates, in the event that you have a product that launches with, whatever the rate may be, and then 2-3 years later, you have to have the conversation around renewals. That conversation never has to be had with this product, which has made it extremely popular with the agent field force that we deal with. The ability to not have to have conversations around those renewals has been a very big deal. And then this is on an S&P type strategy, which is obviously important as well. Protection pillar, 100% protection of downside risk. This is an FIA. In no situation the S&P could be down for 6 straight years, and clients always going to get their money back. So I just want to be very clear about that. And then more importantly, just a second here. More importantly, the SecureAdvantage 6 offers growth opportunities through the index accounts that we discussed. Annual sum crediting strategy as well as the point-to-point on the S&P 500 as well as the Russell 2000. So again, uniquely different in what we're offering. No volatility control strategies. As I mentioned earlier, I'm a big fan of those, but this is an opportunity for a short-term lockup in the S&P 500 that you don't necessarily see out there in other products today. So clarity, the clarity pillar, no annual fees, as I mentioned. The daily difference, the client has the ability to look at their contract values every single day. They can see where they stand. Free withdrawal amounts available during each contract year. Very open and honest about that, including the first year, which is a big deal from a planning perspective. So let's talk a little bit about the 6-year annual sum index account and crediting strategy. There's 3 different important terms that you want to be familiar with: the interim value, as well as the death benefit value and the daily performance value. Okay, interim value and death benefit value are 2 different options that we'll see here. The interim value is calculated daily and reflects the performance rate adjusted by the amount of time elapsed in an index term. The most important thing to get off of this is that's essentially the value that the client would receive in the event that they surrendered the contract. So again, going back to the term I like to use, time served. If you're 3 years in, you're going to get credit for time served. This is important because this is what any RMD would be based off of, but it's really only going to apply to the client if they take a full surrender or withdraw above their withdrawal charges. So important to know, the death benefit value is literally has the ability to change on a daily basis. In the event that you're up here in this example, 10%, client dies unexpectedly, they have full access to that death benefit, which I think is obviously a huge deal. As I mentioned earlier, oftentimes with FIAs, what you'll find is going back to the previous contract anniversary is what is applied towards the death benefit. And then, of course, the daily performance value, having the ability to track it every single day to watch their growth. As I mentioned earlier, we launched this back in February, and if I look at some of the numbers that we're seeing with the participation rates and caps that we had at that time, our anticipation is that there's certainly going to be quite a few clients that see double-digit and even 20 to 30% returns in their first contract year, which is obviously a big deal. Performance lock, again, it's important to point out this is on the annual point-to-point strategy, the point-to-point strategy on the S&P or Russell 2000. In the event that your client likes where they're at, they have the ability to lock it in. They sit on the sidelines for the remainder of that term, and they know exactly what they're going to get. And I'll show you that here in just a second on one of our illustrations. So back to the annual sum crediting strategy. Index performance is measured and stored each contract year during the 6-year index term and summed at the end of the term. Okay. The easiest explanation for you as the advisor on this is very similar to a monthly point-to-point. However, it's done on an annual basis. The big difference between a monthly point-to-point and our annual sum strategy is the monthly point-to-points have no downside protections. Ours actually has a floor of 10%, which can come into play in a big way, and I'll show you that here in just a couple minutes. This is just a quick snapshot applying a 6% cap. And these are just essentially made up numbers, but we'll focus here on the left, moving to the right. In the event that the client receives a 7% or the S&P is up 7% in a year, we cap them at 6, go on through the 4 years. And as you can see, in a down year, this is a great example. Due to the fact that we have a floor of 10%, S&P in this specific scenario down 12%, client only takes a negative 10. At the end of the contract term, we essentially add up the positives, subtract the negatives. That's the return for your given year. And again, these are just some numbers for example purposes. Here's a quick snapshot of what an illustration would look like. Okay. In any given year, David, I hope you guys can see my mouse here. But I want to follow through here and make sure everybody's clear with what we're talking about. S&P was flat. 6%, obviously nothing happens there. Perfect. In a 13% positive year, 6% cap, so on and so forth. So it'll show you exactly how it increases every single year. Here's an example of a negative 73 basis points on the S&P 500. That is also applied. That's on a 6% cap rate, okay? Same thing applies on the annual sum with participation rate, currently at 45% for our middle band. For those larger asset clients, anything above 500, you can actually get 50%, half of the S&P 500, which is obviously a big deal. Again, just some thrown numbers in here, but I think it's more important to specifically look directly at an illustration, so we'll show you that. 45% participation in the S&P 500. In a positive 13 year, we're getting a 6% credit. And the most important thing in my mind is these are locked in every single year and cannot change, right? So positive 30% gets the client a 13.32. In this specific scenario, 4 out of the 6 years we had positive gains for an annual geometric average of 4.21%. Very important to point out that 45% participation in the S&P 500 is the highest rate that I think there is out there in the market today. And more importantly, we know that this 45% participation rate is locked for the entire 6-year term of the contract. Okay, so some of the hesitations that we see on this is, okay, wait a second, I don't get credited till the end of 6 years. Reality is, yes, that's the truth, but the point is, the client has the ability to see it on a daily basis, and quite frankly, any FIA that's on the marketplace today, understanding that there's an annual reset, same thing applies here. The credit applies at the end of the 6-year contract term, and we know, more importantly, as I mentioned, that this rate of 45% is never going to change, which makes it a very big deal. The point-to-point with participation on the S&P, currently the middle band is at 40% participation rate. We'll just follow along with that as well. This is simply a point A to point B with the ability to lock that client in at any given time based on conversations that you've had with them. So you just follow the S&P here, up 13, up 29. I'm sorry, up 13, up 46, up 63, up 62. At that point, we were up 25%. And then ended up being up 31%, 4.63% average. And then again, more importantly, this feature, due to the fact that it's a full 6-year point-to-point term, has that lock-in capability that you can choose to lock that client in, sit on the sidelines the remainder of the term. The last thing that I want to really focus on here is what I would consider the most important piece on our illustration system. This is page 17 of an illustration, and if you like what you're seeing here, I think it's important that you call David or anybody at IAMS and just give them a few minutes to walk you through this in more detail. But this one is very important to me because it shows 5 different 6-year time frames of how this product would apply on the S&P 500. So early 90s, what happens? We have the S&P performance here on the left. You can see that it was a pretty positive performance throughout that time frame. Negative 1.54% was the only negative year. Utilizing the 45% par rate, that would be a 40% return over that specific time frame. Even better on the point-to-point participation due to the fact that we saw a pretty increased trajectory of the S&P 500. Now, let's go down to the next one because oftentimes we get this question as well. What happens in a down year and how does this product work? Well, as you can see, negative 10, negative 13, negative 23, and all 3 back-to-back years. As I mentioned, you can never lose money, but the reality is that was a tough run on the S&P 500, and where it gets more beneficial to the client, quite frankly, is this cap on the downside, right? So in the event that the S&P is down, for instance, 23%, their number that they're banking, for lack of a better term, is negative 10, which puts them in a position to where they have the ability to still get some returns even though the S&P 500 is down 23%. The other thing that I would point out, if we were to do these 6 years, we would go down, down, down. But due to the fact that it does have an annual reset, we still get to participate in this 26% increase in the S&P 500 and would see an 11.87% rate of return with a 45% participation being applied to that. Here's another great 6-year example from 03 to 08. Obviously, the S&P was down almost 40% in 2008. What did we do? We banked a negative 10. So in the event that you were in the point-to-point participation at some point during 2007 or even in 2008, you can pick up the phone with your client, call in. You would have the ability to lock in this rate. It's a timing deal, but it's a nice feature to have and gives that client the ability to have a little bit of control of their assets. The other one that would, in my mind is important to point out is kind of a bull run, if you will, from 09 to 2014. Here's an opportunity where the S&P was up 127%. we're taking no downside risk and see almost a 41% return over a 6-year time frame, taking advantage of the bull market run, so to speak. And then the most recent 6-year time frame, as you can see right here, would have applied almost a 27% return or over 30% on the point-to-point participation rate. So again, the things that I would do to wrap up to give you guys a better understanding of what we're dealing with, this is a true S&P strategy, giving you as high as 45 or 50% participation in the S&P 500, and as David mentioned, a 6.25% cap on that high band as well, which is obviously a big deal. And more importantly, the fact that we lock in our crediting rates from day one, it becomes an extremely unique opportunity for accumulation for your clients. As I mentioned earlier, as we look at vol control strategies in the direction that we hope interest rates are going, they're going to be affected indirectly from that rise in interest rates if we happen to see that. So this is just another alternative on the S&P 500 that's not out there. You know, there's no other product out in the market like this today, and we're obviously extremely excited to have IMES as a partner to push it and talk about it. Great product that, as David mentioned, launched last February, and we've seen a tremendous amount of sales grow over the last year, even due to the fact that we dealt with COVID. But extremely excited about where we're at with them, and looking forward to having the opportunity to work with each and every one of you on this specific product. So if there's other questions, as I mentioned earlier, please call your marketer at IMES. They have all my contact information. If we want to do one-off conversations, I would be happy to do so. This is a unique enough product and different enough that it'll take a couple conversations for you to get comfortable with. But the reality is having 45% participation in the S&P for 6 years guaranteed is not something that you can find anywhere else. So, David, with that, I'll turn it back over to you and see if there's potentially any questions that we may have.
I appreciate your time there, Jared. Yeah, so there are a few questions, and if you want to jump off, I get it. I can actually, they're from one particular agent, it looks like to me, and I know you pretty well there, Mirage. I can give you a call. Looks like you had a myriad of questions here that I can get back to you on that. But I appreciate your time, Jared.
Yeah, thanks, man. As I mentioned to you earlier, I do have a call. I have to be on at 10:30, so I'm going to have to run. But if any questions come up, you know how to get a hold of me, man. I appreciate it.
Thanks for your time, Jared.
Yep.
Okay, as I said, I thank you very much for joining us here at IMES. We very much appreciate your time, and I'll be back in touch with you on your questions, okay? Thank you so very much. Bye.